Hi everyone, I'm Kelly and I'm joined by the Aurora Capital team, Wishva, Hayley and Risa. We're pleased to be with you today to present our proposal for the Borealis Wealth Fund. So our objective is to prove that sovereign wealth can deliver competitive returns while restoring ecosystems. The previous mandate leaned on timberland forestry, while the new mandate focuses on regenerative forestry and increased biodiversity. We shift from generic green infrastructure and ESG-streamed equities and bonds to regenerative infrastructure and biodiversity-aligned capital markets. With this approach, the fund positions itself as a leader of biodiversity-positive finance, demonstrating that competitive returns and natural wealth can grow together with a long-term return of 9.02% and a value of €37.5 billion at year 10. So Metsähallitus anchors our portfolio as steward of 1/3 of Finland's land and water. We have selected this approach because this is where we're able to create the most biodiversity impact through regenerative programs. And we know this provides financial value because there's precedence for this approach globally in countries such as Norway and Singapore. We've allocated €1.65 billion to areas of highest biodiversity and direct support for Finland's net zero target. And around that core, we diversify globally across regenerative forestry, agriculture and blue carbon projects, exporting Finland's ecological leadership while reducing concentration risk. The fund is managed through a hybrid structure, internal oversight for domestic strategy and liquidity, and external mandates for global forestry, infrastructure, and biodiversity equities. All external managers face strict ESG biodiversity KPIs, independently verified each year. Oversight comes from an independent board under the Ministry of Finance, mirroring Norway's sovereign wealth model, ensuring transparency, accountability, and the adaptive reallocation as evidence of impact emerges. And we're not going to pretend that trade-offs vanish, we're going to manage them. We reject fast-growing monocultures that chase carbon credits at the cost of biodiversity, and we're moving away from timberland forestry towards regenerative forestry. We balance Finland's domestic credibility with global diversification and align ahead of EU biodiversity regulation to avoid stranded assets. We accept lower short-term returns to secure lasting ecological resilience. Our message to investors and policymakers is simple. Finance can regenerate nature and create wealth at once. And I'm going to hand you over to Wishva to take you through asset allocation.
Thank you so much, Kelly. Now moving to our portfolio allocation. So the legacy structure was financially sound, but ecologically very limited. While it generated returns, it did not actively restore Finland's natural capital or have a positive biodiversity impact. So our proposed design directly addresses this gap by reallocating capital towards assets that deliver both financial resilience and measurable biodiversity outcomes. Real assets form the backbone at 52% target in regenerative forestry, agriculture, infrastructure, and blue carbon projects that deliver long-dated, stable cash flows alongside ecological restoration. Equities represent 33% split across biodiversity index funds, private equity, and innovative biotech venture, which introduces growth and innovation. Green bonds at 10% preserves capital and provides a steady income while financing verified conservation outcomes. The remaining 5% in cash and T-bills ensures liquidity for rebalancing and future opportunities. This structure shifts Borealis from passive ESG investing to active biodiversity regeneration, which balances stability, growth, and impact. Now, turning towards our methodology, the portfolio was constructed using a rigorous data-driven framework. We began with historical benchmarks and fund-level performance data, then adjusted forward returns to capture biodiversity credits and ecosystem service revenues. Each asset class was tested under 3 scenarios to assess performance across market conditions. Finally, we calibrated volatility, liquidity and correlation factors to achieve a diversified risk-adjusted allocation. Conceptually, the structure behaves like a balanced ecosystem where real assets provides roots for stability, equities form the canopy for growth, and bonds with liquidity add as a protective layer, absorbing shocks. This last slide shows how we are changing the geographical allocation in the proposed portfolio. 30% of assets remains in Finland through Metsähallitus-led restoration projects, aligning directly with national biodiversity and net zero goals. 19% is allocated across Europe, leveraging policy stability and growing investment in restoration-focused projects. The remaining 51% is deployed globally, accessing international biodiversity and carbon markets, which can achieve a stronger ecological and financial outcomes for every euro that we invest in. This structure keeps Finland as the anchor for credibility and restoration, while global diversification strengthens returns and scales ecological impact. Now I will hand over to Haley, who will cover the biodiversity impacts.
Thank you, Worsha. Now, after seeing such a great return, I'm sure we're all curious about the impact of our investment allocations. Together, our regenerative forestry, agriculture, blue carbon, and infrastructure investment restore over 900,000 hectares of ecosystem and soils, reducing nearly 25 million tons of CO2. These results together will increase the species intactness, MSA, and decrease the species level of extinction, PDF, from 10 to 20% of the overall portfolio. All KPIs will be verified by independent third party, aligning with the UN Sustainable Goals and TNFD reporting guidelines. There are limitations when measuring biodiversity impact. First, data related to biodiversity is often inconsistent, posing difficulty for gathering and quantifying impacts. However, by entering early, BWF can set reporting standards with the help of global reporting guidelines like TNFD. Second, there's not enough historical comparison for biodiversity-focused investment, making it hard to compare performance between peers. BWF can utilize this weakness to define early standard, developing prototype indices to influence the market. And finally, biodiversity outcomes are harder to validate than traditional financial metrics. It's an opportunity for us to lead innovation in measurable biodiversity impacts by developing reliable verification processes and scientific indicators. I'll hand over to Risa to take you through scenario analysis.
Thank you, Haley. So our analysis tests how the 11 billion euro fund performs under three macro futures. We have our climate shock, our base case, and biodiversity mainstreaming. And we use the IMF, the Eurocentral Bank, and the NGFS frameworks to build these. In the base case, steady global growth supports around 9% annual returns with a Sharpe ratio of 0.6. Under climate shock, because of our diversification, it cushions losses to returns around 6%. And in the biodiversity mainstreaming future, the nature positive assets leave with 10.6% and the strongest risk-adjusted profile. This chart highlights how the proposed portfolio consistently outperforms a legacy fund across all futures. Even under climate stress, the portfolio's broader diversification helps mitigate losses, while in the biodiversity mainstreaming scenario, returns accelerate as new markets mature. By 2035, the fund grows to roughly 30 billion euros in the climate shock case, 36 billion in the base, and over 40 billion euros when the biodiversity becomes a key economic driver. Forestry, infrastructure, and biodiversity-linked assets provide the growth, while green bonds and liquidity buffers anchor stability, which creates our resilient and compounding profile. To test the portfolio's robustness, we ran a 1,000 iteration Monte Carlo simulation using the short, mid, and long-term return assumptions across all three scenarios, starting with the 11 billion euros in assets and 10 billion euros in scheduled contributions. The simulation shows consistent growth even under stress. In the lower percentile of the climate shock case, the fund still reaches about 17.6 billion euros. The median outcome around 36 billion euro, reflecting steady compounding, and in the 95th percentile biodiversity mainstreaming scenario, assets exceed 62 billion euros, capturing strong upside as nature markets mature. Overall, the results confirm high resilience and long-term value creation across uncertainty. To conclude, the Borealis Wealth Fund portfolio delivers across four dimensions. First, it enhances biodiversity through measurable restoration and ecosystem value creation. Second, it achieves diversified growth and resilience across forestry, infrastructure, and biodiversity-linked assets. Third, it structures return across short, mid, and long horizons for balanced liquidity and compounding. And finally, it establishes Finland as a global leader in biodiversity finance, redefining sovereign wealth through ecological value. Together, this portfolio demonstrates how biodiversity integration strengthens both financial performance and long-term national resilience. Thank you.
Amazing. Thank you for your presentation. Do we have any questions from our judges? Stephanie?
I can start. Can you provide a bit more insight into your on page the global allocation page where you took your proposed portfolio. What's the modeling behind it?
If we go to, the set allocation. So what we wanted, so initially when we came up with the idea, we wanted to invest in assets which would bring the highest biodiversity impact, and one of the main objectives that we wanted to achieve was the Finland's net zero target, plus for the Finland's land sector to go from a carbon source to a carbon sink. So what we identified was the main way to reach this was through our main anchor, which is Metsähallitus, which is a state-owned enterprise which controls 1/3 of Finland's land, and 90% of these lands sits within restorable area. So what we are doing is we are investing in these projects. Metsähallitus have been implementing successfully very long-term projects, but the thing is they are very chronically underfunded, which is why the scale of ecosystem regeneration is very low. So what we are doing is we are funding these already impactful projects and sourcing the finance so we can bring a more ecological impact for Finland's natural capital. Since real assets does not provide a very the yield that the real assets provide in short term is quite low, we are sort of cushioning it with other equities plus bonds to make sure that we reach a good target in the long term, in the short term as well, where our long-term returns is expected to reach around 9.2. Thank you. I hope that answers your question.
Maybe just as a follow-up on your assumption page, can you provide a bit more color where those assumptions are coming from?
Are you talking about the scenario assumptions?
Yes.
Yeah.
Okay, I will take this question. If we go to 8A, Appendix 8A scenario, if it's based on the scenario analysis assumption, so we brought it from the Network for Greening the Financial System framework, and this was designed to be used by central banks and supervisors to model transition and physical risks. And we also thought about macroeconomic assumptions from the IMF and the Euro Central Bank, so we made sure it's policy aligned as well. So they have, our base case is what we call the orderly transition. Effectively, you just have stable growth, moderate inflation, and policy is all quite steady. And it was our neutral reference point. For the climate shock, they had a disorderly transition scenario. So this is when climate change is literally heating things up. Abrupt carbon tax hikes, we talk about policy shocks and commodity volatility. And so we increased volatility about 2-3%, and we cut our asset returns to replicate that. And our real assets, green bonds, just help to buffer the downside because we keep with the inflation linked and the contract-based revenues. For the optimistic scenario, which is the biodiversity mainstreaming, this was aligned with the accelerated transition scenario. So because biodiversity becomes a priced financial factor, and so we increased the asset returns and just slightly dialed down the volatility, just helps to simulate the early mover advantage. So we've got our forestry, our agriculture, and the carbon, both blue carbon as well. So they outperform and help with our scenario. Yeah.
Fantastic.
Perhaps a follow-on on this very slide. So how do you incorporate this scenario from a quantitative standpoint to get to the numbers that are on the assumption page?
I think slightly brushed on it because, so what we have in our portfolio allocation. I couldn't tell you which slide it was. But effectively, start with our base case and all the return assumptions. We had a short, a mid, and a long-term horizon. So first 3 years, we're talking about building up our capital because there's going to be a lot of capex involved in restoring our ecological systems. Second is our midterm, which is the middle 3 years, and then the last 4 years is our long-term assumptions when we hope that all of our ecosystems do really go beyond. With our base case, each asset allocation, if we could just even go to the portfolio allocation slide, I think 6A, no, the appendix 6A, please. Yes, so we've just placed our short-term returns and our long-term returns, and each asset we've researched into what were the long-term internal IRRs, as well as just paper study benchmarks to derive these. So effectively, if this is our base case, again, if we go into our climate shock, we really reduce those returns and increase the volatility. And then vice versa for the biodiversity mainstreaming, we upped each category's return and slightly, like I think 0.5 to 1% in the volatility to model each scenario. And that's when we go into the simulation to show how the returns had come out.
And keeping on this page, could you talk to the liquidity of the portfolio and the ability of the underlying assets to generate current income?
I would take this question if that's all right. I would talk about the liquidity. So the decision to allocate over half of the portfolio to real estate is sort of grounded in both macro fundamental and impact efficiency. So for a sovereign mandate like Borealis, real assets are the most direct transmission mechanism between capital deployment and ecosystem regeneration, since they produce long duration, inflation-linked cash flows while sequestering carbon and restoring biodiversity. So the traditional financial assets, they do provide liquidity, but they do not regenerate natural capital. So from a portfolio construction point of view, this allocation improves duration matching, providing sort of a natural hedge against inflation and climate transition risk, and stabilizes return through low correlation with public markets. So we treat illiquidity here as a feature and not a flow because it anchors the fund in long horizon assets that align with sovereign objectives. So, but also liquidity is maintained through our bonds and the cash instruments, which sort of ensures tactical flexibility while real assets compound value over time.
Christoph?
Maybe to dive deeper a little bit into the real asset side. How big are these markets? And maybe you can compare to, and that's the regenerative forestry, etc. Like how big are these markets as of today versus, let's say, the assets that are in the legacy portfolio, the real assets?
Yes, I will take that one as well. So if we go to the initial portfolio allocation, slide number 5. So like we have mentioned previously, in the real assets, we are including regenerative forestry, blue carbon and oceans, regenerative agriculture, and regenerative infrastructure. If we're looking into the regenerative, I'll start with regenerative infrastructure. So there are quite a lot of projects all around the globe that are working towards this. If we could move to Appendix 6, just a minute. Appendix 6E, sorry, 6, yeah, 6E, oh, sorry, 6D, to just the previous slide. Sorry about that. One more. Yeah. Okay, so these are currently some of the funds that are working towards projects that which includes regenerative infrastructure. And like I said, they are all over the world, and we have looked into global example plus domestic example for this. And likewise...
and what size do these have?
So these funds are over billions if we go into figures. Likewise, Kelly, if you move to the next slide, likewise, Blue Carbon, they do have similar projects, and these are mostly global, and we weren't able to find much through Finland, but these projects have already been going on for years, and they have shown very good performance financially, plus the ecological outcomes as well.
Thank you.
Yeah.
Leslie.
Hi, thanks for your presentation. You mentioned three phases to your return horizon, and the first stage having some capex. Could you just elaborate on those phases and kind of what those inflows versus like returns versus outflows look like, and where those expenses are being funded from?
Yes. So if we could move to Appendix 1.
Sorry, just for the interest of time, if you could quickly wrap up your answer.
Yeah, Appendix 2C, please, Kelly. Okay, thank you. As we mentioned, our long-term return, so here is how we illustrate our financial returns as they grow, as restoration projects mature. As mentioned, we do have a lot of capex in the short term, but we are sort of adjusting that with the equities and bonds that we have in our portfolio. And during midterm, we are expecting the carbon markets and the biodiversity markets to sort of come in place. Like, we're not expecting it to be fully mature at this point. So this is sort of an early carbon credit and biodiversity market. So there's sort of a stable yield from this. And in long term, we expect full ecological maturity and all the restoration projects to be fully mature at this point, which is why we expect a higher return by the end of this horizon.
Amazing. Thank you so much. And let's give them a round of applause.